Have you ever wondered how the stock market really works or why companies decide to sell shares? Imagine being able to invest in the next big thing before it becomes a household name or growing your wealth while you sleep. Sounds exciting, right? But have you felt overwhelmed and confused by all the jargons and numbers? You're not alone. That's why we are here. In today's video, we'll break down the basics of the stock market, exploring how it operates, the importance of diversification to manage risk effectively, and the reason why companies sell shares. We'll guide you on how to start small, set clear goals, and choose your investments that match your risk tolerance. Plus, we'll discuss the benefits of investing for your financial growth and why it could be a smart move for your future. Stick around because in the next few minutes, we are going to unravel the mysteries of the stock market and show you how to make your money work for you. Trust me, you don't want to miss this. Let's dive in and start building your financial future together. What is a stock market and how does it work? Ever wondered what the stock market is and why it's such a hot topic? In simple terms, it's a marketplace where you can buy and sell shares, which are tiny ownership stakes in the company. Whether you're a newbie or a seasoned investor, understanding the stock market can open doors to financial growth. When you buy a share, you're investing in a company. If the company does well, your shares can increase in value. If not, they might drop. The share market helps companies raise money for growth, and it gives you, the investor, a chance to earn money too. So how does it all work? Now let's break down how the stock market works. The stock market is a huge digital marketplace where buyers and sellers meet. Companies list their shares on stock exchanges through a process called an IPO. Think of it as the central hub where all the action happens. Once listed, investors can buy and sell these shares through brokers who act as middlemen. The price of a share goes up and down based on supply and demand. If many people want a share, its price goes up. If few people want it, the price goes down. What are a primary market and the secondary market? The primary market. This is where the action begins. When a company decides to go public, it launches an IPO called Initial Public Offering. This is like the company's debut party, where it invites investors to buy shares for the very first time, raising funds to fuel its growth. The secondary market. Once the shares are out there, they start trading in the secondary market. This is where the real hustle happens. Shares that were bought during the IPO are now being bought and sold among investors like you at their current market prices. It's like an ongoing action where you can jump in to buy or sell shares whenever you like. What are the types of market securities traded? Did you know that there is more to the stock market than just stocks? From bonds, derivatives, currencies, commodities, mutual funds, and ETFs. There are various types of securities being traded every day. Each one offers unique opportunities for investors. Why do companies sell shares? Ever wondered why companies sell shares? Imagine a company as a rocket on the launch pad, ready to blast off to new heights. But rockets need fuel, and that's where shares come in. Companies sell shares to raise money they need for exciting growth projects, whether it's opening new stores, launching groundbreaking products, or expanding their reach. Selling shares is like inviting you to be a part of their incredible journey. Why invest in the stock market? Why should you even bother investing in the stock market? Isn't it risky? Let's dive into the reasons why the stock market might just be your ticket to financial growth. Ready? Let's go. Investing in the stock market is like planting a money tree. Over time, your investments can grow and provide you with returns. Here is why you might want to consider it. Growth potential. Historically, the stock market has offered higher returns compared to savings accounts or bonds. Ownership. Investing in stock means owning a piece of a company. As the company grows, so does your investment. Income. While some stocks pay dividends, which are like regular paychecks, just for owning the stock. Think of it as a way to let your money work for you while you are busy doing other things. Types of stocks. Stocks can seem like a confusing topic, but they don't have to be. Today, we are breaking down what stocks are and the different types you can invest in. Let's dive in. A stock represents a share in the ownership of a company. There are two main types of stocks. Common stocks. These give you voting rights and a chance to earn dividends. However, if the company goes bankrupt, you get paid after everyone else. Preferred stocks. These offer fixed dividends and have priority over common stocks in case of bankruptcy, but usually don't have the voting rights. Stocks can be categorized into different categories. Blue chip stocks. These are well established financially sound companies. Growth stocks. These companies are expected to grow at an above average rate. Value stocks. These are undervalued stocks that are trading for less than their intrinsic value. Dividend stocks. These are companies that pay regular dividends. Each type and category offers different benefits, so you can choose according to your investment goal. Stocks come in all shapes and sizes, just like ice cream flavors. Why do share prices move up and down? Ever wondered why shares are always moving up and down? It's not just random. There is a science to it. Let's unravel the mystery behind share price movements. Share price fluctuate based on several factors. Supply and demand. If more people want to buy a stock, its price goes up. If more people want to sell it, it goes down. Company performance. If a company is doing well, its stock price usually rises. If not, it can drop. Market sentiment. News, economic events, or global issues can affect how investors feel about the market, influencing stock prices. External factors. Interest rates, inflation, and geopolitical events can also impact stock prices. Think of it like a roller coaster. Sometimes you're climbing up, sometimes you're going down. But the ride is always full of surprises. Stock prices can be a wild ride, but now you know what drives the action. How much returns can I expect from the stock market? Wondering how much money you can potentially earn from the stock market? Let's break down the possible returns and set realistic expectations. Returns in the stock market can vary widely. Historically, the average annual return has been around 7 to 10% after inflation. However, it is important to remember long-term gains. The longer you stay invested, the more potential there is for growth. Risk and reward. Higher potential returns usually comes with higher risk. Balancing risk and reward is key. Diversification. Spreading your investments across different assets can help manage risk and potentially improve returns. It's important to set realistic expectations. Some years you might see higher returns, while other years could be lower or even negative returns. The key is to stay invested over the long term to smooth out these fluctuations and allow your investments to grow. Think of it like a garden. With patience and care, your investments can grow into something wonderful. How much money to invest in the stock market? Not sure how much money you should start investing? Let's break down how much you might need and how to start your investment journey without breaking the bank. You don't need a fortune to start investing in the stock market. Here is how to decide how much to invest. Start small. When you're just starting out, it's a good idea to start small. Only invest an amount that you can afford to lose, especially if you're still learning the ropes. This could be as little as 500 or 1000 per month. The goal is to build the habit of investing and to gain experience over time. Emergency fund. Don't put all your money into the stock market. Make sure you have an emergency fund in place before investing. It's important to have savings for unexpected expenses. Investing goals. Define your goals, whether you are saving for retirement, a big purchase, or just growing your wealth. As you become more comfortable and knowledgeable, you can gradually increase your investment amount. Just remember, the key to successful investing is consistency and patience. Think of investing like planting seeds. Start with what you have and watch it grow over time. Difference between investing and trading. Investing and trading might sound similar, but they're actually quite different. Let's break down the key differences between these two approaches and find out which one suits you the best. Here is the scoop on investing versus trading. Investing. It focuses on long-term growth. Investors buy stocks and hold them for years, aiming for gradual appreciation and dividends. Trading. It involves buying and selling stocks frequently to capitalize on short term price movements. Traders often hold stocks for days, weeks, or even minutes. Investing is like planting a tree and waiting for it to grow, while trading is like picking fruits daily. Both have their benefits depending on your goals and risk tolerance. What kind of stocks should be avoided for investment? Not all stocks are created equal. Today, we are going to uncover which types of stock you might want to avoid when making investment decisions. Let's get into it. Here are some types of stocks to be cautious about. Penny stocks. These are very cheap stocks with low liquidity and high volatility. They can be risky and often subjected to manipulation. Highly speculative stocks. These are companies with unproven business models or shaky financials. They can be risky bets. Overhyped stocks. These are stocks that are hyped up without solid fundamentals and can lead to losses when the hype dies down. Companies with poor financial health. Look out for companies with high debt levels, declining revenues, or management issues. Think of it like avoiding fast food. It might look tempting, but it's not always the healthiest choice. Stay smart and avoid the pitfalls of risky stocks. Can anyone make money in the stock market without a finance background? Absolutely. You don't need to be a finance guru to make money from the stock market. Here is how. Education. Learn the basics through books, online courses, or videos like this one. Knowledge is power. Start small. Begin with small investments and gradually increase as you become more comfortable. Use tools. Many platforms offer tools and resources to help you make informed decisions. Seek advice. Consider consulting with a financial advisor to guide you through the process. Another important aspect is staying disciplined and avoiding emotional decisions. The stock market can be unpredictable and prices will fluctuate. But if you stick to your plan and make decisions based on logic rather than emotion, you can achieve success over time, regardless of your background. Is investing in the stock market really that risky? Today we are breaking down the risks involved and how we can manage them. Let's dive in. The stock market does come with risks, but understanding and managing them can make a big difference. Here is what you need to know. Market volatility. Prices can fluctuate widely in the short term. This can be nerve-wracking, but it's part of the game. Company-specific risks. The performance of individual stocks can vary based on company performance, industry conditions, and the management. Economic factors. Interest rates, inflation, and geopolitical events can impact the market. To manage risks, diversify your investment, stay informed, and invest for the long term. Think of it like driving. You need to be cautious and prepared for bumps along the road. Don't let risk scare you away from investing. With the right strategies, you can navigate the stock market safely. Investment diversification. The secret to reducing risk and maximizing returns. Want to know how to manage investment risk and protect your money? Today we are talking about the importance of diversification and how to balance your investment risk. Let's get started. Investment risk can be managed by diversifying your portfolio. Here is how. Diversification. Spread your investments across different asset classes like stocks, bonds, real estate, and industries to reduce risk. Risk tolerance. Assess how much risk you are comfortable with and choose investments that match your risk profile. Regular review. Keep an eye on your investments and adjust your portfolio as needed based on market conditions and personal goals. Think of diversification like a balanced diet. It's all about variety to keep things healthy and stable. How to start investing in the stock market and how to open trading account for stock market investing. Ready to take the plunge into the stock market? Let's walk you through the steps to start investing and open your trading account. It's easier than you might think. Choosing a broker. First, you need to choose a reliable broker. Look for a broker that offers a user-friendly platform, low fees, and good customer support. Fill out the application. Once you have chosen a broker, visit their website and fill out the online application form. You will need to provide basic information like your name, address, and other details. Submit your KYC documents. You'll also need to submit your KYC documents and a cancelled check or bank statement. Most brokers now offer digital KYC, so you can upload these documents directly online. Complete the verification process. Some brokers may require you to complete an in-person or video verification. This is a simple process where you will be asked to verify your identity. Account activation. After your documents are verified, your trading account will be activated. This process usually takes a few days. Once your accounts are set up, you are ready to start buying and selling stocks. Just remember to take your time, do your research, and start with small amounts as you get comfortable with the process. Congratulations on starting your journey to the stock market. You now know the basics of how it works, why companies sell shares, and why investing could be beneficial for your financial growth. The stock market offers chances to own company shares, earn dividends, and achieve significant returns. As you begin, start small, set clear goals, and choose your investments that fit your risk tolerance. Investing carries risks, but with a solid strategy and discipline, it can build wealth over time. Remember, investing in the stock market isn't just for the experts. It's for anyone who wants to grow their money over time. The more you learn, the more confident you will become in making smart investment decisions. If you found this video helpful, please like, share and subscribe to our channel. Hit the notification bell to stay updated with our latest content, from tutorials to investment tips. We would like to hear from you. Leave a comment below with your thoughts, questions, or topics you would like us to cover. Stay tuned and happy investing. Every journey starts with a single step, and you have just made yours.